What's going on, everybody? Welcome back to another video. So in today's video, we're going to be covering probably my favorite trading strategy, and this is the one that I use for most of my trades, and it's the one that made me the most money in 2024. So I'll explain pretty much everything about the strategy, from how it works, what times to trade it, and everything you need to make it work for you too. So with that said, let's go ahead and take a look at how this strategy actually works. So if you've been following me for some time, you've probably seen this strategy, but today we're going to do a full in-depth guide on how it works and everything you need for it. So this is known as the break of structure fair value gap setup. The entire process is very simple and it only has two steps that you really need to know. So the first thing we look for with this setup is a break of structure, and if you don't know what that is, we basically look for a strong break above a previous high or a previous low. And then the second step of the setup is to look for a fair value gap, which if you don't know what that is, I have a video covering the concept fully in depth, so make sure to go back and watch that. But again, like I said, it's very simple. We wait for a break, we wait for a fair value gap to form, and then we look for a play off of that fair value gap. So if you guys want to take a second and maybe write down these notes right here about how the strategy works, you want to look for a break above a key high or low, wait for price to form a fair value gap, and then wait for a pullback into that fair value gap to enter a position. Now there's also some rules you need to follow for the strategy to actually work well. So the first thing we want to do is we only want to trade this setup between 9:30 and 11 a.m. Eastern time. This is when the markets have the most volume, and this is where we're going to find the best trades. So we don't want to trade before 9:30 and we don't want to trade after 11 o'clock. This is very important, so make sure you keep this in mind. Do not take trades outside of this time parameter. Now the second thing you want to note is that we look for the setup on the 1 to 5 minute time frame. So the 1 minute, 2 minute, 3 or 5, those are all good for taking a trade. It just depends where the setup is actually forming. And the last thing is that we want to only trade this on high liquidity tickers. So a lot of people try to use this setup on things like meme coins or just random cryptos, things like that, and that's not going to work. You want to trade this on things like Nvidia, Tesla, NQ, ES, anything that has a lot of volume and a lot of people trading it. So like I said, the strategy is very simple, and if you want to take a screenshot of these notes that I have right here before we go into the examples, that's probably a very good idea. So with that said, let's go ahead and take a look at a few examples of this setup that I took in the live markets. So here we are on our first example on Nvidia. So what I want you guys to kind of focus on here is there's two ways to trade the actual break of structure. So in this case on Nvidia, we took out the previous high on the 1 hour time frame, which qualifies as a break of structure, and also on the lower time frame we took out the high of day, so this is also a valid break of structure. So you can either trade it off the 1 hour break of structure or the 2 minute one. Those both work perfectly fine, but in my experience I feel like the ones on the lower time frame are better, so you might want to stick with that only. So very simply, we got a clean break of structure and we have a fair value gap, so there's literally nothing else that we need for this setup except for price to respect that fair value gap. So let's see what happens when price pulls back into the fair value gap and if this is actually a trade that's worth taking. So right over here, price comes into the fair value gap and we get a very nice wick that indicates that price is actually very strong and it's respecting this fair value gap. So we can go ahead and take our entry on this candle right here, and usually for my stop losses on this setup, I like to go for the low of this middle candle on the fair value gap, and for my targets I like to go for the next key level, which in this case is an hourly high at 143.60. So we've got everything we need, so let's go ahead and play this setup out and see exactly what happens. So just like that, price gets a very clean move up to that hourly high and we get a very clean profit on this trade. Now this was obviously our first example. I'm going to show you guys a few more so it makes more sense, but as far as you guys can see, we really don't look for a lot of things on this setup. So that's it for our first setup. Let's go ahead and take a look at another trade I took last week on Amazon. So here we are on Amazon on the 3 minute time frame, and as you can see right here, we have a key high in the pre-market and we had a key low in the pre-market as well. So what I like to usually do with these pre-market levels is wait for price to break either one, and in this case we took out the low instead. So that right there is our break of structure complete, and now we just need to wait for a fair value gap. Now the reason I want to go over this example is because we actually have a few fair value gaps in this case, and how do you know which one to actually end up taking on a trade? So this is where it gets a little bit tricky, but it's not really that complicated if you understand price action. So what I like to do is wait for price to come into the fair value gap, and whichever one ends up respecting with a strong rejection is the one I'll actually take. So basically, if price came into this fair value gap and disrespected this first one, and then we came into the second one, I would take an entry off that second one instead. So let's go ahead and see what happens in this case and where we take our entry. So in this case, price respects the first fair value gap that it tests. So in this case, I would take this trade right here. So try not to overthink it too much. If you guys see a clean rejection on one of the fair value gaps, just hop in the trade. Don't really think twice about it. So we'll go ahead and take our entry on this candle right here. And once again, we want to put our stop loss right above the high of this middle candle. And for our target, we can go for this 1 hour level, which is right over here. So once again, we have everything we need. We have a break of structure, we have a fair value gap, and we have the trade in the right time that we need it. So now the only thing left to do is play this setup out and see exactly what happens. So once again, we get a very clean move down to that low and we get another clean, consistent profit. So hopefully this is starting to make make a little bit of sense, and I'm going to show you guys a few more examples of ones that work and some that don't, so it's a little bit more clear. So with that said, let's go ahead and head into our next example. So here we are on QQQ on the 3-minute time frame, and once again what I like to do is mark out my key levels, in this case the pre-market high and also the pre-market low. So the market obviously got a break to the downside, so in this case I'm looking for short setups off of the fair value gap. So this is a pretty similar example to what we just took a look at on Amazon, where we have a few fair value gaps and we don't know which one to really take the entry off of, except for the fact that price action is respecting. So in this case what I'll do is I'll wait for price to come into this first fair value gap. If it respects, I'll take my trade directly off that one right there. So let's see if price comes into it and ends up respecting. So just like on the last trade, we had a really nice reaction to that fair value gap, so I'll take my entry directly on this one instead of waiting for these two. So once again, take your entry on this candle right here with a stop loss right above the high of this middle candle, and then we'll go back to the 1 hour time frame to identify our levels, which in this case is going to be right over here. And if you'd like to give yourself a little bit more room, then you would go for this next low that's down here. So once again, you have everything you need for this setup. Let's go ahead and see exactly what happens. So we get a very clean drop once again from that fair value gap. We end up taking out both targets and both of them end up working out very well. So hopefully by now the setup is very clear, but let's go ahead and take a look at one last one to make sure you guys get a very good understanding. So this right here is actually an example of one that would not work for this setup. So I usually get this question from people that say, hey, we just got a breakout right here, so why would I not look to take this trade? And the answer to that is very, very simple. So technically we took out the high of the market right over here, but we did not close the candle above it. So first off, it is not a good break of structure. And second off, we didn't form a fair value gap. We just broke it and instantly reversed right back down. So I want you guys to remember, we need to have every single thing of this strategy aligned. Otherwise, there is no trade for us right there. If we have a break of structure, but there's no fair value gap, there is no entry. If we have a fair value gap, but there is no break of structure, once again, there is no entry. They all have to work together for this to actually profit. So I just wanted to show you guys that example because a lot of people do get confused sometimes, and I wanted to clear that up a little bit. All right, so we've covered pretty much everything we need for this setup. We're going to take a look at one more to really make sure you guys are understanding it. So let's go ahead and take a look at our last example. So here we are on Tesla on the 1 minute time frame, and right over here you can see we have another pre-market high and we have a very clear pre-market low. So in this case, price comes and takes out that pre-market low, so we only want to look for setups to the downside. So in this case, price comes and takes out that low, so we only want to look for fair value gaps to the downside. So right after that break, you get a very clean fair value gap right over here. So our only last thing left to do is wait for price to come back into it and take our entry. So here we get a very good rejection, so we can go ahead and take our entry on this candle right here with a stop loss right above the high of this middle candle. And we're going to go on the hourly one more time to find our target, which is going to be at this candle's high right over here. So we'll look to exit the trade right over here or on the stop loss, whichever ends up hitting first. So let's go ahead and see how this setup ends up playing out and see what happens. So once again, from that fair value gap, what do we get? We get a very clean drop to the next key level, and we get another clean, consistent profit on that trade. So hopefully this video helps you guys understand this strategy a little bit more in depth, and hopefully it's something that you guys can add to your own trading and find a lot of clean trades using this setup. So I hope you guys enjoyed this video. So make sure to leave a comment about what you guys want to see the next video on, and I'll make sure to get that out to you guys as soon as possible. So everybody take care. Once again, I hope you guys enjoyed, and I'll see you back in the next video.